Assalamu alaikum, everyone. Bit of an interesting day today in the markets. Today, by the way, is Tuesday, August 26th. And the indices all ended up in the green, despite starting out on a weaker note, carrying in the sentiment from yesterday. So Russell, Dow Jones, S&P, NASDAQ, all up close to half a percentage point. And the VIX is down a bit. We also got another green day for Tesla. We're now at 351, believe it or not. And gold is flat, silver is flat, and Bitcoin rebounded. Solana is having its time under the sun, up 5%. Still shy of 200, but I think we'll get there quite quickly. Doge is at 21 cents. And Pudgy Penguins had a good day, up 4%. So if we want to look at the distribution of winners and losers, we can see industrials has done really well. That's that patch right here. On the heels of really strong earnings in industrials. And so this performance is to be expected. And we can see consumer defensive falling back as the market seems more risk on today than it was yesterday. And so today we're going to talk about the big mistake that I think Tom Lee is making. Tom Lee is an analyst that I have a lot of respect for, by the way. So just because I am saying that he's making a big mistake doesn't mean he isn't a good analyst. But first, let's start with the firing of Federal Reserve board member Lisa Cook. So the way the interest rate decisions are made is by vote. And there's 7 members that vote. And right now, with the firing of Lisa Cook, which is not a random event, but we do have quorum for a interest rate cut in the September meeting, based on past voting preferences. So with Lisa Cook out, the cut should happen. Now, the allegation made by the Trump team is that Lisa Cook lied on her mortgage application. That is, she mentioned that she had or listed 2 primary residents in her mortgage application. And that was cause basically for the president to fire her. Obviously, this has nothing to do with her mortgage application, but it is a reason, an excuse to fire her. They are going to challenge this in the court, but that's going to take a pretty long process, I'm sure. As basically all litigation in the United States takes a long time. So Cook is vowing not to quit her post, but she is fired nonetheless. And probabilities suggest that the Fed chair members, or Fed board members rather, will be making sure that they haven't committed any mortgage fraud. And indeed, most Trump adversaries will be making sure that their mortgage applications are clean as a whistle. And the markets certainly seem to think that, considering what happened to Lisa Cook, the Fed board members will be that much more inclined to cut rates. Probability right now for a September rate cut is 90%. And by the way, all jokes aside, I actually don't think this is healthy at all. This is clearly, I think, a politically motivated firing to encourage a certain policy change, that is a rate cut by the Fed. And I don't think messing with the independence of the Fed is actually good for financial markets over the long run. Certainly, the premium that U.S. equities have commanded in recent years because of the appearance or the confidence that many global investors have had that in the relative soundness of financial markets in the United States, that premium may disappear if the something like the independence of the Fed is not respected. So I'm actually not really a fan of what is happening, despite rate cuts, being bullish for equities in the near term. Now, keep in mind where we are. This August-September period tends to have, on average, the lowest monthly average performance for the S&P. Certainly, if you look at full history, that is what it suggests, September having the lowest. But if you look at 2015 onwards, that average is a bit better. If you look at 2020 onwards, that average is negative, but a bit better than the full history, and the same with 2023 onwards. Needless to say, just looking at these graphs, it's pretty clear that September is not really historically a strong month for the market. That being said, there has been a lot of volatility this year induced by policy changes, tariffs, wars, etc. That may change this pattern. And so nothing is, patterns aren't 100% going to repeat. It's just important to keep in your mind. A sobering view for Bitcoin miners here, as we see total transaction fees have not increased, have not peaked, have not spiked at all with recent Bitcoin price appreciation. And this is, I think, largely due to the Bitcoin ETFs. People are parking their Bitcoins in these ETFs. And once they're parked in the ETF, they're really not going to be moving on the network anytime soon. And so this is, I think, what Bitcoin miners can expect. That is to earn very little from transaction fees on the Bitcoin network. And by the way, as I said many, many times, Bitcoin is not a good currency. It's not a good medium of exchange. It is a good store of value, but as a medium of exchange, it's quite poor. Bitcoin maxis often got very mad at me for saying that, but that's the truth. And transaction fees are bearing that truth out. And so what's going to happen to Bitcoin miners is that, this exodus of public Bitcoin miners from the Bitcoin mining space into the much more profitable AI and high performance computing businesses with wider margins, that's going to continue until this hash rate smooths out or even declines a bit. Because right now the difficulty, which is what the total hash rate is reflecting, the difficulty of mining Bitcoin, it has been increasing steadily, and it's been making the Bitcoin mining business uh, pretty darn tough. And so that's why Bitcoin miners are leaving, and they will continue to leave, I think, until the economics of Bitcoin mining improve. And so what you're going to see in the space is a consolidation into a lot fewer Bitcoin miners. Obviously, there'll still be Bitcoin mining. Companies will still be doing it because without it, there won't be any Bitcoin. So people will still be doing it, but the exodus will continue until the economics of Bitcoin mining improve. And that has to take into account the lower transaction fees. And what you're going to see is consolidation, as I mentioned, fewer Bitcoin mining players, improved profitability for these Bitcoin miners. And I think the ones that make it, the ones that are left after the exodus, I think will be valued at better multiples than currently, considering that the business of mining Bitcoin needs to improve and the margins need to improve. And I think that will happen. So long as I believe in Bitcoin, I believe that Bitcoin mining will become more profitable. Now, the mistake that I'm referring to with Tom Lee is that his company, Bitmine Immersion, is basically an ETH, an ETH treasury company. And the argument that he's made, that I've heard him make, is that Ethereum is basically going to host stablecoins, and it's going to reap the benefits of basically stablecoin transactions, which are going to grow at a very large pace. And therefore, Ethereum holders are going to be able to stake and earn a lot of money from staking their Ethereum, and the price of Ethereum itself is going to go up, considering demand for it will increase as returns on holding it increase as well. However, I really think that this is a mistake. I think that a lot of these crypto boomer investors have mistaken Ethereum for something that has value. At the end of the day, this is a outdated technology. Ethereum is that already has a superior alternative, which is called Solana. Solana is much cheaper fees, much more user friendly, much faster than Ethereum. Ethereum is just this behemoth that is very hard to fix, and it's just the structure that it's built on is just very challenging for developers. I don't care how many developers you throw at it. It's very challenging to get it to a speed, efficiency, a user friendliness that something like Solana has, and was built from the ground up in a very different way. And so Solana it has been revealed that Circle has minted $25 billion of USDC, one of the most popular stablecoins, on Solana. And you're going to see that more and more stablecoins are going to be minted on Solana. As I mentioned, it is the superior technology. And it's going to take market share away from Ethereum. And indeed, I think there's probably a mispricing of Solana right now, simply because of the hype that Ethereum has been able to garner for itself, because of these Ethereum treasury companies like Bitmine Immersion Technologies, which Tom Lee is a big part of. But eventually, once people get back to the data, get back to the performances of these networks relative to one another, the money is going to start flowing to Solana from Ethereum. So I do think that there is a mispricing here, and perhaps it's a good time to buy Solana, not ETH. If you are holding a bag of ETH, I think that you've been gifted with an opportunity to offload at a pretty good price. And I would take that opportunity, but obviously this is not financial advice, as always. I do think that Solana will outperform something like ETH moving forward. The utility certainly suggests that this should be the case. And if there's any correlation between utility and price, then this suggests that that should be the case. Wallahu alam, of course. Allah knows best. So with that being said, do make sure to join PIF if you haven't joined our lovely community. And with that, let's take some questions. Assalamu alaikum, Gaming with Fed. What's your take on ISRG? Intuitive Surgical is part of our watch list, and we cover it. And so take a look at that. I think it's a great company. Valuation is tough for me to pull the trigger on right now in terms of buying, but it's certainly on our watch list. If we get below our buy price, I'd definitely add it in a heartbeat. It's a great company. Salamat Lubna, nice to see you. Hope you had a restful vacation. Indeed, I did. Thank you. How should we pay Zakat on our stocks? Should we pay it only when we sell them? So I have a video on that. This is a larger topic. So I have a video on that. Take a look at it. It's one of the pre-recorded, not the lives. So just look at Zakat on stocks, make an argument. But make sure to take the opinions of multiple sources and make a decision. Your view on ISRG fundamentals. So I kind of mentioned that. I think it's a great company. Salam, thoughts on Iron AI center expansion? Do you not see as much growth as others are anticipating? I mean, it's really tough for me. I mean, it's either a heck yes or it's a no. And iron at current, I mean, it's defied all the odds. I certainly didn't think it would be at 23 at this particular point in time. But, you're looking at a forward PE of 166. So that's, I mean, you're looking forward at the earnings next year. It's at 166. I mean, I get people are excited about it, but 166 forward PE, I mean, maybe it's justified. But that doesn't really leave me with much margin for error. I mean, the optimism has to be really well suited. And, when you buy a company, it's at good valuation, things don't work out. You don't really, and certainly when I'm dealing with other people's money, this is the case. You don't really blame yourself. I mean, okay, something, exogenous happens to the company and the company goes through some turmoil, you can live with yourself. But if I lose people money buying something at 166 forward PE, then I blame myself. So I don't want to put myself in that situation. 166 PE is rich. I mean, your forward PE, by the way, we're not talking about trailing 12 months. We're talking about forward. So yeah, it's tough for me to reconcile, the valuation that the market is assigning with the fundamentals as far as I can tell them. So yeah, I mean, we made good money on iron. There was 2 cycles that we traded iron on, and so we made good money on it. But we certainly sold early. I mean, I didn't think that we'd get to 23, as we said, but I thought the valuation, justified the move that we made. And really, I like to think in terms of probabilities. And so, you try and make decisions based on the simulation of different outcomes and their probabilities, and giving yourself the best chance not to make a big mistake. And so sometimes you get, something that's on the outliers, like in the tails, or right or left tails. And for that, I've just learned to say, you know what, it's on the right tail, it's on the left tail. I'm not going to um, I'm not going to second guess my decision making process if it was on the right or left tails, an outlier result, because what you want to make sure of is not making a big mistake. And so, yeah, buying at 166 forward PE seems rich, and could be classified as a big mistake if things don't turn out exactly as investors think it will. Do you think Solana can hit 300? Yeah, I do. I do, actually. And certainly, if you look at the usage statistics, the utility that is coming from the network, it's perhaps aside from Bitcoin, the crypto that is providing the most utility for the most number of people. And so I think based on that, and my belief that price always follows utility. And in fact, if you want good investment ideas, you should just ask yourself, okay, what's producing the most value for? It's either producing a lot of value for a few numbers of people, or producing little value for a large number of people, or in some cases producing a large amount of value for a large number of people. What is a company that is doing that? And buy that company, you'll do well eventually. Don't worry about anything else, basically. Almost. I mean, the valuation has to be reasonable, or at least close to reasonable, but you don't necessarily need a discount. But if you do that, price will follow, and you'll do well. So with that being said, I hope this was useful. Do leave a like. If you enjoyed this live, as I mentioned, become a PIF member if you haven't already. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.